Tinha tomado 7 na cuidou. Que chombeiros de agora. Venha que o dinheiro da forma está gastado. Mas menina não. Tinha tomado 7 na cuidou.
Good morning. Happy Thursday morning. Good morning. Welcome to San Francisco. Welcome to the BSR conference. My name is Jeremy Prepsis, and I'm BSR's Vice President for Asia Pacific, based in Hong Kong, but in today to kick off this session. Ladies and gentlemen, it is my great pleasure to briefly introduce our first speaker, our I3 speaker, Mr. Oliver Niedermaier, founder, chairman, and CEO of Tau Investment Management. I'm particularly pleased to be able to introduce Mr. Niedermaier as he offers a vision for investing in solutions to the existing problems in the supply chain. Tau's management philosophy states, quote, "Global supply chains are in crisis. Decades of outsourcing, of offshoring have reduced costs for leading corporations, but have also brought calamitous risk and inefficiency. We've all been witness to these calamities, and that is an appropriate word, as thousands have died in factory fires in Bangladesh, or water pollution in China, which has degraded ecosystems. Not to mention a whole variety of supply chain-driven calamities, from milk and melamine and infant formula in China, to the treatment and exploitation of migrant workers, often around the world. These failures have a moral color, but their effect is also to sap profits and siphon value. What is interesting is that Tau and Mr. Niedermaier see these challenges also as turnaround opportunities, opportunities which to date investors have not seized upon. Tau is planning on changing that. And leading this change is our next I3 speaker, Mr. Oliver Niedermaier, who is chairman and chief executive officer of Tau Investment Management, an innovative investment firm that aims to orchestrate and implement large-scale capitalist solutions to capitalism's worst failures. Mr. Niedermaier began his career as an entrepreneur. He started, managed, and sold several companies. Most recently, he was CEO of DF King Worldwide, which he founded and grew into the largest proxy solicitation service and shareholder relations firm globally. He currently serves as its chairman emeritus. He's also a former operating partner at the private equity firm Advent International and serves as a non-executive director of Equinity. In 2005, he and his wife established the Tashi Foundation for Bhutan, a nonprofit organization affiliated with UNICEF, which is dedicated to children's education in Bhutan. He was selected as a young global leader by the World Economic Forum in 2010. Capitalist solutions to capitalism's failures. Please help me in welcoming Mr. Oliver Niedermaier.
Thanks a lot, Jeremy. Thanks a lot, Jeremy. Aaron, thank you very much for having me. Good morning, everybody. First of all, let me start with a couple of confessions. Number one, I'm a German-born New Yorker, so please don't expect any sense of humor here. What you may expect, though, is a good sense of timing, so I'm really going to try to be done after 20 minutes, and then we have some questions here. Second confession, I have a lot of respect for the CSR profession. I'm not a practitioner. I'm an investor, and actually a long-term greedy investor. And as such, and as Jeremy in his very kind introduction mentioned, we're looking for long-term, successful capitalist solutions to capitalism's worst failures. There's lots of capitalist failures out there, as you all know. One of the biggest ones is in global supply chains. And we started looking at that a couple of years ago, and with a view of really finding the turnaround opportunities here. Because our strong belief is if we show that we can make money by turning around situations like they are in global supply chains, more money is going to come, and ultimately a systemic solution is going to be very feasible. So let me define the problem first in garments, but far beyond. You have similar issues in the furniture industry, in the toy manufacturing industry, in consumer electronics, and so on. We looked at garment manufacturing already a year ago, long before the most recent incident. So when you look at some of these things, I mean, it sounds like a new problem. In 1911, there was a triangle shirtwaist factory in what I assume is still called the Garment District or the Flatiron in New York. 146 people died, mainly women, and they died because there was a fire and they couldn't get out of the place. So now that's 1911, New York City. Obviously, we've made a lot of progress and developed our form of capitalism significantly further. So about 102 years later of improvements, 1,129 people died in Rana Plaza in April. But they didn't die in New York City. They died in Bangladesh. I don't know who's been to Rana Plaza. It's about, depending on traffic and the roads, about 1.5 hours, 2 hours drive from downtown Dhaka. It's not that remote, actually. I was there a couple of weeks ago, and our team's been there, obviously, on the ground many times before. And you can still smell the decomposing bodies, which is not a very pleasant experience, to be honest. And then you're standing there, and you know that under this rubble, there are still a couple of hundred people that haven't been compensated by the government. And you just stand there, and you really don't know what's wrong, because the problem is it's kind of a crime without a villain. Or with a lot of villains, including us as consumers, us as corporate leaders, us as buyers, whatever. And it's not really anybody's fault. That's why you see all this finger pointing afterwards. Now, Rana Plaza is not a limited incident. You have situations all over Cambodia, India, China, workplace-related disasters. Now, we're not talking about 700,000 people a year dying of cancer in China because of air pollution or whatever. These are direct work-related incidents where people die in factories. And it keeps happening and happening. And for us, worker safety and people dying in factories is just the tip of an iceberg, and obviously it shows you that there are huge labor and environmental issues, which we look at ultimately as just unsustainable business practices. And you're much more familiar probably than I with a lot of these numbers, and now you can talk about externalities and whatsoever. Let me talk a little bit about what a factory like that really looks like when you walk in. And here's just a business guy, and I'm a halfway decent operator of mid-sized global P&Ls, but I'm definitely not Jack Welch. But you walk into these factories, and you don't have to be Jack Welch to understand how inefficient they are. First of all, you walk in, and let's say on an average factory floor, you have about 4,000 people working. Now, out of 3,000 people, 2,950 are women. They look beautiful in their saris, and they work at sewing machines. 50 of them are supervisors. They are all men. The best management technique that these supervisors have is they yell at the women. There's a couple of reasons why they yell. Number one is because they don't have any management skills beyond yelling. Number two is it's incredibly loud in these places, and nobody has come up with a brilliant idea of giving them intercoms and headsets that they wouldn't have to yell. When you then look at the inefficiencies, how these places operate, ultimately they operate in a certain way because they have inefficient machinery. The sewing machines are often from the 1960s. I don't know how much sewing you have done in your life. I haven't, I admit that. But I can see how inefficient it is when it takes you about 15 minutes to change a thread. Then you look at the lighting, talking about eco-efficiencies and environmental degradation. The lights are up about 25 feet in the air. Regular light bulbs create a lot of heat. That's great, because that's exactly what you don't need in Bangladesh. So what they don't create is light down where you need it, where you're sewing, instead of having a simple small LED light, which would be much more energy efficient and would also solve the purpose. So then you look at how this electricity is really generated. The electricity is generated through a gas pipeline from the government that's fairly unstable. When that shuts down and they still need to produce on time, what happens? Well, they switch on the diesel generator. The diesel generator, again, I'm not an expert. I would say it looks like from the 1950s, perhaps 1955. It drips all over the place, just like the boiler system. So we just did in a pilot factory in Bangladesh, actually, we just ripped out a boiler system for the huge capital expense of $100,000. The first year energy and water savings were $500,000. Again, this is not rocket science, this is just highly inefficient capitalism. Now, let's talk a little bit about how this all is connected, the power of networks, as the theme of this great conference. The problem is when you look at this villainless crime or villainless failure, it's happening here. It's happening on Wall Street. It's happening on Fifth Avenue where we buy, or in Union Square where you buy this stuff. I once had a research done when you look at S&P 500 CEOs and you strip out internal recruits and you strip out some of the noise. Do you know what the average tenure these days is? Somewhere about 2.5 years. Another number you may be familiar with, let's look at long-term investors, i.e. mutual funds. I'm not talking about all these flash traders and quants and whatsoever. I'm talking about long-term mutual funds. Average hold period in an S&P 500 stock after you take out some of the noise, about 7 months. Now what's happening is these guys are sitting at a roadshow and talking about the long-term strategy of their business. So there's one gentleman or lady talking about the long-term 10-year vision of a business, and another person sitting there as a long-term investor, but they both know they're not going to be around. This is just a completely insane system that we unfortunately have all helped or accepted that it was being created. And that leads to short-term pressure throughout the system. That's what we call this race to the bottom, and you can see it in the garment industry. And everybody's getting squeezed, and it's actually nobody's fault. I worked for hundreds and thousands of CEOs of large companies dealing with their shareholder pressures. Of course they got these pressures. Of course nobody wants to see them to invest in factory safety in that example, or in any long-term aspects of their business, because they are being paid to make the next quarter and perhaps the next 3 quarters. When you then talk to the factory owners, and let's leave some of the crooks aside, and there are obviously people who enjoy having child labor in their factories, and there are people who enjoy squeezing people and yelling at people, but most of them are actually decent human beings. And decent human beings don't really want to do these things, but they do them because they are being squeezed, because they have to turn around, because this is fast fashion, not so much in Bangladesh, in other markets like Turkey whatsoever, and they just have to deliver on time at cutthroat margins without having the capital to really fix these places. So how can you turn that around and create kind of a race to the top? And we thought a lot about that, and we run a lot of tests, and it comes down to a lot of micro and detail. I think a famous fellow German architect once said, the detail is not the detail is the product. So this is very important when you look at the detail of these transformations. But ultimately, you just need to change the mindset on a macro level. How do you really do that? When you're an active investor, when you come in with money, when you come in with expertise, and you come in with access to Western buyers, you can completely change the way the system works. And such a systematic approach ultimately allows you to pay people properly, have them live dignified life, and reduce significantly the environmental degradation. Let's look at some of these details. First of all, we're in a very lucky position for what we're doing with a lot of partners, because usually as an investor, you always, everybody has spoken to venture capitalists or private equity guys, they're always looking for great management teams and USPs and whatsoever. We don't need that. We're just looking for factories with clients, lots of people, and lots of crap going on. That makes it a lot easier because there are tens of thousands of them around. So we're operating in a very target-rich environment thanks to the way capitalism has developed that lovely system. When you look at these ordinary manufacturers, what they need is capital at reasonable terms. If you want to lend some commercial lending from a bank in Bangladesh, but it's similar in a lot of other garment-producing nations, Vietnam, Cambodia, Indonesia, whatsoever, you pay about 20%. Now, how's that going to work? It just doesn't. So there's no commercial lending. The other reason why there's no commercial lending is because obviously all the books are cooked and they have 3 sets of books. So that's something you need to get over, and you need to provide some kind of bridge financing until they are eligible for proper bank financing. That's the capital side. The expertise side, I walked through a factory and I was very impressed. It was one of the better ones, and they were actually training their staff there. So there were 50 women sitting operators at brand new 1969 sewing machines, and they were being trained by a woman. And the woman, I didn't want to do a profiling, but she didn't look Bengali to me. So I asked the factory owner, who is that? And he was all proud because he had hired these Chinese consultants who did the training. That's absolutely brilliant. And I watch them and I say, well, how long does the training take? Yeah, 5 days. 5 days, okay. But I didn't see them speak, so I asked, well, does she speak Bengali? He goes, no, it's nonverbal communication. So for 5 days, and I would say 30% of you, including me in the room, are wearing shirts of the brand that was manufactured in that place. And again, nobody's fault, but a Chinese lady is talking Mandarin to somebody for 5 days. That obviously results, in addition to ridiculously low pay and all of that, leads to just huge staff turnover. Staff turnover of about 7 to 12% in some of these factories a month. So what happens is you need to retrain all of these people every month, because the moment they get 100 taka offered in the factory next door, that's where they go, of course. If you change that and break it and actually increase wages, but you do it in a proper way, you work with non-profit partners, you work with for-profit partners, you actually do it in their language, and you show them that there is a social upward mobility, that actually women can become supervisors, that women can actually have a career there, that they can make a couple of $100, that the kindergarten is a real kindergarten and not showing 3 children that are the supervisor's children and are just being let out to play when a buyer comes or somebody like me shows up in a factory. So when you look at this micro level, ultimately it's just trying to visualize that, but there are decent factories out there. And let's leave the optics aside. Light helps doing the job. And all of us in our very comfortable jobs in sitting behind a desk, we enjoy when we have some daylight every now and then. So why wouldn't you give that to somebody who operates 12 hours a day, 6 days a week on a sewing machine? Why wouldn't you have a canteen there so that people, after they walk back from work for an hour, don't have to cook for the next day and bring their own meal because there is no canteen? All of these things are not very expensive, and you can resolve them if you have a systemic approach. Now, let's talk about the systemic approach. We think actually you can do all of that by creating supernormal and ethical returns for investors. You can build better businesses, you can build better factories, and you can ultimately have a lot better supplier for the big brands, the big retailers. You got to bust a couple of myths. The first one, you cannot pay workers more because otherwise you need to raise prices. And that's always a woo, you can't do that. Okay, so first price you can raise is the price that a retailer, a brand pays to the supplier. Let's say they also squeezed the margins, let's ignore all the billionaire lists and whatsoever. So let's assume the t-shirt has to have exactly the same FOB price when it leaves the factory as is now. That's fine. And let's further assume the European consumer needs all the t-shirts and is not willing to pay a cent more. And that's how we build all our business cases. We assume the consumer is not willing to pay a cent more. Because the moment you assume that, it's getting very risky. If we get that as an upside, if there are conscious fashion lines and people are willing to do that, that's all great. That's upside. So we believe with the productivity gains you can achieve, you can easily pay double, triple the wages, link it to productivity gains, and reduce staff turnover, reduce involuntary absenteeism, and really manage that you make still the same amount of money or more. Second myth, if you could do all of this in an environmentally sustainable way, in a profitable way, it would already have been done. I think that's an argument I probably don't have to make in this crowd here, but no, it's not very cost efficient when you leave all of this energy wasted and heating up the place instead of recapturing it. No, it's not very cost efficient when you have water dripping and then you buy the water again very expensively from the government. So a lot of our non-profit partners have done lots of studies in all of these jurisdictions, have done transformations. You can easily do that and reduce energy and water consumption by about 30–40%. So even if the cost side on the labor side would increase, which we don't believe it does in most of the cases, you could probably compensate for that easily through the eco-efficiencies. Again, this requires 6 to 18 months of work, hard transformation, and it requires money to do it, which is not available in these places right now. Myth number 3, it's impossible for a brand to trace all the way to the bottom their supply chain. I admit it's difficult, but then again, we have an investigative team that's led by one of my colleagues, Benjamin Skinner, who's a former investigative journalist and an expert in supply chain slavery. Our guys, for very little money, can find a lot, and all the way down to the cotton in the garment industry, all the way down to the raw materials in other industries. And you can actually manage a lot of that. A lot of the brands we're working with right now in cooperation have mapped all of their tier 1 suppliers are now going to tier 2, which is work. But you can trace a lot of that. There's also a lot of technology. So what we're trying to do is create a complete new level of transparency and have all of our findings up in the cloud, available to the buyers, available to our investors, and part of that can also be used to make it available to the consumer ultimately to show how things are produced. And that's a level of transparency that you just can't deny anymore. This is a little bit like gravity. In a day where there are more cell phones with photo capacity out there, even in the poorest countries, than there are toilets, everybody can make a photo of a labor abuse or toxicity being pumped in the river. But you can also turn that around and actually create the race to the top by creating that kind of level of transparency. So the power of networks, coming back to that, we think a systemic solution, an orchestrated solution, needs somebody in the center providing capital and the willingness to do it. That's obviously where we view our business model and where we think we're going to make money in the garment industry. We just announced that we are raising and deploying currently $1 billion just in the garment industry. We're going to do similar vehicles very fast in other industries. We do believe that capital is needed and the willingness to manage it very actively, be on the ground and do that. But then we need to cooperate with everybody. We need to have the legislative tailwinds. There's obviously legislative tailwinds when you think about supply chain transparency legislation, like it's enacted here, SB 657 in California. There's federal legislation that we're hopefully helping to reintroduce in the House soon. There's similar legislation coming out in the EU and the UK. But there's also legislation and regulatory frameworks that need to be enhanced in places like Bangladesh, Indonesia, and so on. So the policy-making framework. We're working with industry associations. And again, we're long-term greedy capitalists, so we enjoy working with the bad guys as long as they're not the really bad guys. And we're enjoying actually in working with every industry association as long as they approach us because they want us to help fix their image and their industry in reality. If they then want to abuse us in certain countries to say, okay, that's going to help our trade agreements with the US and our negotiations because we're the more sustainable guys, we don't have the worker safety issues other countries have, that's fine. Again, we're all about creating that race to the top. We're going to benefit from it financially, and ultimately we're going to have the biggest impact because other people will follow. So, when you look at the manufacturers, what they get out of this, it's obviously they're going to make more value out of their stake. So whilst we may be a 30% shareholder or whatever it is, a minority shareholder in their business, their remaining 70% is very likely going to be much more valuable than the previous 100%, and they got a future. So right now what's happening, just in the example of the garment industry, is that the few good and compliant companies are flooded with orders and can't fulfill these orders. But they are not allowed to illegally subcontract anymore because the procurement departments are cracking down on that for a variety of reasons after what happened in recent months and years. So they need capital, they need to expand, they need to upgrade. The smaller guys don't have any chance of even getting orders anymore. So they need capital, they need to consolidate, and they need to move on. Let me pause there and perhaps take a couple of questions and comments. I don't know who's a big wave surfer here, but I'm not. I'm trying to one day. I like this metaphor actually when you when you look at what's happening in these global supply chains, this is a huge wave that's about to crush a lot of people, including brands, including millions of people who used to take the garment industry as their first step out of poverty. You can actually make something out of that wave, out of that huge energy right now, and it's all about timing. If you have the technology right, if you look a little bit into big wave surfing, the guy only has a chance of surviving that because a jet ski pulled him in, and he only got a chance of making it out into the safe deep water channel where the boats and the jet skis are if another jet ski gets him out of there, if the wave crushes him. Technology is very important. That wasn't possible 10 years ago, not even for these fellows. We are trying to build a kind of collaborative approach where we really use the power of technology, where we use the power of networks to achieve exactly that in certain industries. And again, garment is the first one. Thank you very much. And if there are any questions, please. I think we've got 5 minutes or so for questions, comments, concerns. I think we've got somebody back there and over here. Just hold on, there's a mic coming.
Thank you. Yeah, could you articulate a little bit? I mean, I very much admire what you're doing, agree to a great extent. My question really is around, because I'm very interested in how the market drives these changes. So you, as a practitioner from the market side, can you articulate a little bit more the benefit to you, the benefit to your investments, how that actually pencils out for you? We can see kind of what it does on the manufacturing side of improvements, but what's the not the personal, but the business motivator for you?
No, I appreciate your concern for our well-being, so that's good. Thanks a lot. But no, it's a very good question. It's very simple. We improve efficiency in these factories. Let's take a specific example. We put 50 million in a factory. We improve efficiency. After we've done that, they do the same 100 million in revenues, but they do it perhaps at a 12% margin instead of a 10% margin, and everybody's a little bit happier and dignified. So that's fine. That's not going to make us rich, and that's not going to change the system. On top of that, we want to do exactly that to the suppliers that big brands and retailers want us to build them out to more sustainable, more scalable, more reliable suppliers. Because if we do that, then it's going to be very natural. I don't even have to have a contractual relationship with the buyers. They are just going to source more from us because it's going to keep them away from the New York Times front page when the next accident happened, because it's not going to be in our factory. And it's a more reliable provider. So now I got more revenues. Now I got a 12% instead of a 10% margin, and I got 150 million in revenues instead of 100 million in revenues. And now you add that we have cleaned up the finances. We provided non-traditional lending. We have World Bank affiliates and whatsoever, and local affiliates coming in, and we clean up that balance sheet. So we actually do a little bit of nasty work, but financial engineering on these companies. When you add these three factors, and now you have a transparent provider, our investment is just going to be significantly worth more than it was when we put the money in. In reality, all a little bit more complex, but yeah. Back there.
Your talk was bang on 20 minutes, and as someone who works in Switzerland, I really appreciate your German punctuality. I work in a company that has a very big supply chain, and the conditions you describe, I think, are familiar to many people in the room here. One of the challenges we face is this difficulty in persuading our suppliers to move from this narrow, short-term self-interest to what you're describing, which is nothing but enlightened self-interest. Given this, how are you actually persuading these potential customers of your investment that what your value proposition is really something that they want?
Thank you. And first of all, we're actually not persuading on that end, because we don't want the buyer's money. We actually don't want anything but structured engagement and cooperation. And it's a very, very simple deal with the partners we're working with right now. The deal is absolutely simple. You work with us as a buyer, a retailer, a fashion house, whatever, in other industries, and help us identify the suppliers that you would actually like to have, where you have issues because they're not scalable enough and whatsoever. And we, in exchange, consider them for investment. They need to meet certain criteria, revenue size, whatsoever. And then we look at them and we consider them for investment. If we think that can work, then we're going to invest, we're going to fix them, and we're going to build them to purpose. Of course, at a certain point, you're going to want to source from these guys if we do our job right. So we're not so concerned about persuading buyers because our approach is just very different. We don't give you a hard time because of what's going on in your supply chain. We just want you to point us to the real problems, and we hopefully fix them. I think we got time for one more question. To stay Swiss here.
Thank you for your talk. I work for a company. We use investments in creative ways to create social impact as well. And my question is, you mentioned ethical returns. I was wondering how you plan on measuring and evaluating what types of returns you're actually getting in terms of social impact or ethics, something like that.
Thank you. I have a lot of respect for what you're probably doing and what a lot of impact investors are doing. You will have realized I don't use that language. So somebody told me the other day that we're going to be raising, what we're doing with that first fund is already going to be the biggest or one of the biggest impact funds in history. And I said, no, it's not. It's one of the smallest turnaround funds in history. We look at it differently. We look at it as a combination of turnaround equity with growth equity. And when you look at private equity, I mean, we also invest in public companies when it's structured pipe investments. But in history, in the asset class of private equity, the most money was always made in turnaround and growth equity situations. And that's what we're after because we think we can capture a transformation premium. We do want to measure absolutely the environmental impacts, the social impacts, and the financial impacts, but we look at it primarily as a turnaround opportunity that happens to have, hopefully, a lot of significant positive impact on the environment and labor side of things. We're down to 0 here. Thank you very much. It was a real pleasure. Thank you.